Hello everyone, I am Rajesh Kasira, part of the fund management team here at Mirae Asset Mutual Fund. I am the fund manager for the Mirae Asset Flexi Cap Fund. Remaining true to the label, Mirae Asset Flexi Cap Fund focused on being flexible through emphasizing on bottom-up stock picking. We have not maintained any strict boundaries, rather we have gone with the merit of the business. Therefore, market cap allocation and sector weights are an end result of bottom-up stock picking. The sector we were overweight on at the start of the year rewarded us on a risk-adjusted basis. To name a few, healthcare saw an increase in the net earnings of around 27% in the last 12 months. In the same period, industrial saw an increase of around 112%. The portfolio have not undergone high turnover as we have added businesses with medium to long term horizon. Having said that, certain changes were made wherever required. In Feb 2023, the markets were still recovering from a subdued 2022 performance. No one would have thought that 2023 would be a complete contrast to the previous year. At that point, the mid-cap and small-cap space looked relatively more attractive, and rightly so with the broad-based rally the segment saw afterwards. Currently, looking at the valuations, large-cap space looks more attractive. The P for both Nifty 50 and 100 is below their long-term averages, whereas P for both mid-cap and small-cap is above their long-term averages and also at 20 to 30% premium to large-cap. Therefore, large cap is more attractive market cap with select pockets of opportunities still present in the mid and small cap space. In terms of sectors, financials still seem interesting, particularly banks because of their strong asset quality. Building materials considering the real estate boom that is happening and scheduled delivery of housing projects inventory. Other than these, healthcare, capital goods, power and auto are few other sectors we continue to remain positive on. In the last 1 year, more than 60% of the portfolio has had a large cap tilt with adequate mid and small cap participation. On an average, the fund has maintained 67% in large cap, 19% in mid cap, and around 10% in small cap. Particularly to April 2023 onwards, we increased our position in mid and small cap space from 27% to 34%, being the highest somewhere in the middle of 2023. Currently, as on February 2024, the fund has 71% in large cap, 16% in mid cap and 13% in small cap. While current valuation look in favor of large cap space, over the remaining two, there is no yardstick for the fund which adheres it to specific allocations in market cap. Market cap allocation is a result of bottom-up stock picking as mentioned earlier. (2024) is quite an eventful year, both globally and domestically. It is an election year for some major economies like the USA and India. With elections, some volatility in the market is given. Infra spending could see a slowdown in the near term considering pre-election year. This may make first half FY25 softer for infra and industrial names. Consumer spending so far has been mellowed, particularly broad-based consumption segments like FMCG and auto. Rural spending has been slow so far and did not revive in 2023 against estimates. Thus, revival in consumption segment may be there post-elections. A Flexi Cap fund provides flexibility to move across market caps and sectors. For the time being, valuations have moved up rapidly for mid and small cap space and may remain high for a longer period of time. In such a scenario, one has to look at pockets of opportunities within the overheated space. On the other hand, large cap valuations are benign. the fund is optimally positioned and may reap benefits of select opportunities in the mid and small cap space, along with large cap acting as an anchor, which could act as a stability provider. On the sector side, we refrained from participating in few names owing to discomfort on valuation. Going forward, we may relook at those sectors a bit different names where growth could compensate valuations.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.